But let's go to Steve Leisman because Fed Governor Chris Waller is speaking right now out in California. Steve, what's he saying?
A little unsatisfying, Scott. Fed Governor Waller is saying it's unclear at this point whether at the June meeting the Federal Reserve should hike, should it skip, or should it pause at the next meeting. You'll note he doesn't talk about the possibility of a cut and no mention, by the way, of the debt ceiling. What he says is he's looking to major data releases over the next 3 weeks to make up his mind. That includes the PCE inflation numbers we get on Friday, as well as the May CPI, and you have a jobs report coming before the Fed meets in mid-June. Inflation data, here's the three things he talks about. Just based on the inflation data, he says that says the Fed should hike. But add in the banking uncertainty, maybe the Fed should skip a meeting. Add in the policy lags, as in from all of the tightening to this point and the credit tightening. That suggests the Fed should pause, as in be done. However, he goes on to say the Fed should not stop until it's clear that inflation is moving back to its 2% target. The inflation fight, he says, for him continues to be the priority. Economic activity has slowed, the labor market is tight, and inflation is too high. He says slowing lending can offset the need for tighter monetary policy, and he warns that if the Fed doesn't take this into account enough, the Fed could tighten too much and raise the risk of a recession to the economy. There are some signs that the labor market is cooling. Temporary help, he says, is down for the third straight month. Job vacancies are declining, and the quit rate in the JOLTS report has indeed fallen. He's concerned about the lack of progress on inflation, and he says some inflation gauges, some of the more narrower gauges that he follows, show no progress at all in the past year. Housing market is rebounding recently, and it raises questions about whether the rent component will continue to decline. He's finally concerned that service inflation won't decline if wages do not decelerate. Scott, this is an unusual report. First of all, we know Waller as pretty well a pretty dyed-in-the-wool hawk on these issues, but he's unclear at this point. He's taking account of the banking issues. Doesn't say the debt ceiling, but my guess is he's also taking account of that in his thinking about what the Fed should do in June. Scott?
Yeah, you highlighted the word that matters most, I think, Steve, and that's unclear. And the market is going to, disseminate and decipher what he is exactly thinking ahead of, the next month's meeting.
Scott, just one more thing. I can't give you a true read on what's happening in the Fed funds market. The uncertainty about the default is raising rates on the short end. That's bleeding over into the funds market. It shows it's tightened, but we don't know if that tightening is simply from the effects of concern about default, as in people exiting those short-term notes, or there's some other actual betting going on about what the Fed's going to do in June.
Yeah, I'm looking at the 1 month, 3 months, 6 months,
right, exactly.
1 year, all above 5%. 1, 3, and 6 have been. It's just the 1 year getting above 5% has happened in the last couple of days. Steve, thank you.
Sure,
At Steve Leisman, wrapping the latest from Chris Waller out in California, latest version of Fed Speak.